Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life?
Wednesday, halfway through the trading week. Welcome to Modern Investing Techniques, episode 35. Today is May 6th, 2026. I'm Patrick, broadcasting from Vancouver. Midweek, let's reassess this week's positions and look for fresh setups. Quick reminder, if everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. AMD's 15% surge after data center revenue and guidance beat shows AI infrastructure demand remains a powerful driver worth watching for tech allocation. Major indices closed mixed, with the S&P 500 rising 0.8% to 7,259. The NASDAQ Composite gained 1.0% to close at 25,326. The TSX Composite slipped 0.2% to 33,567. AMD's strong earnings reaction and stable U.S. job openings data at 7 million supported sentiment overall. The Bank of Canada held its policy rate at 2.25%, while Disney delivered its first report under the new chief executive. Our simulated portfolio stands at a cumulative loss of $48.04 across 11 trades with a 46% win rate, trailing the NASDAQ's recent strength. The Securities and Exchange Commission has proposed a shift to semi-annual earnings reporting through a new 10S form. This change would let companies prioritize multi-year capital allocation and product cycles rather than managing quarterly expectations. High-growth sectors like artificial intelligence and streaming already produce large, single-day moves on results. Less frequent reporting may reduce the short-term volatility that often prompts retail investors to chase headlines. Implementation starts with reviewing the most recent 10K or annual report for long-term guidance. Metrics such as multi-year revenue targets or capital expenditure plans. Cross-check those metrics against current analyst models available in your brokerage research portal. Historically, this approach has rewarded patient holders during periods when management could execute without constant headline pressure. The main risk is reduced transparency for smaller investors who rely on frequent filings. Therefore, always pair any position with strict position sizing and stop-loss rules to manage the uncertainty. For today's practice investment, we are maintaining the weekly momentum hold in AMD. The stock gapped higher by 15% on the earnings release after the data center segment exceeded estimates. We are treating the 20-day moving average as initial support and watching for sustained volume above the recent 20-day average to confirm continuation. Our target remains a gain of 4 to 9% over the 5-day hold if momentum persists and sector peers follow through. We have set a mental stop at negative 7% from entry to cap the simulated loss given current valuation levels. This setup carries medium confidence because the earnings catalyst and sector tailwinds are aligned, yet elevated valuations introduce uncertainty around follow-through buying. Remember, this is a simulated trade for learning purposes only, with no real money at risk. What we are watching now is whether the post-earnings volume confirms the move or signals early distribution. Turning to yesterday's flash trade review, we entered a position in Bitcoin at $33.67. The trade exited at $33.81 for a gain of 0.42%. That translated to $4.16 on a $1,000 simulated position. However, the NASDAQ rose 1.0% over the same window, leaving us with negative 0.58% alpha. The running total now stands at negative $48.04 across 11 trades. The win rate sits at 46% with 5 wins out of 11. The key lesson is to always verify price data from multiple providers before entering flash trades on volatile assets like crypto. Unifolio.pro is an upcoming Canadian-focused platform that aggregates brokerage accounts, crypto holdings, real estate valuations, and registered account analytics into a single net worth view. Automated adjusted cost-based tracking helps with tax reporting across TFSAs, FHSAs, and RRSPs. It directly addresses the fragmentation most Canadian investors face when using Wealthsimple for simplicity and interactive brokers for low-cost execution. Early users can sign up at the beta link on the site and provide feedback on desired features such as automated superficial loss rule alerts. Rally's AI Arena lets users run simulated portfolios managed by different large language models and track real-time performance against benchmarks. Today's update showed one model's allocation up nearly 50%, while another trimmed exposure to certain semiconductor names. This gives retail investors a low-cost way to observe how large language model strategies handle sector rotation and position sizing. Access is free via the Rally site or associated accounts for daily snapshots. Polymarket event contracts on developments such as a 64% probability of a Trump-China visit or 46% general election odds provide a direct gauge of market-implied political risk. Canadian investors can access these via offshore platforms or use the probabilities as sentiment inputs when sizing global equity or commodity positions. These contracts help overlay political and macro risk onto existing sector exposure without needing to predict exact outcomes. Disney posted a fiscal second quarter beat driven by streaming and theme park revenue in its first report under the new chief executive officer. The results showed the media giant's core businesses remain resilient, even as linear television declines. Investors should add DIS to their watch list and review streaming subscriber metrics at the next earnings for potential entry on any post-report weakness. Rhythm Pharmaceuticals released positive earnings and pipeline updates before the open, triggering a strong price response in the healthcare sector. The news points to continued momentum in names with upcoming catalysts. Consider a small satellite position in healthcare if your portfolio currently lacks defensive growth exposure. The Bank of Canada held its policy rate at 2.25% for the fourth consecutive time. The decision reflects ongoing inflation risks tied to oil prices, keeping variable rate mortgage and loan costs steady for now. Review your mortgage renewal schedule, or HELOC balance, and model the impact of a potential 25 basis point cut later this year using your bank's rate calculator. U.S. private sector hiring rate data showed the rate rising to 3.9%, while openings remain stable near 7 million. This points to steady labor demand that could support cyclical sectors. Favor industrials or consumer discretionary in the next rebalance if upcoming data continues to show hiring strength. Looking at our overall simulated performance, we have completed 11 trades with a 46% win rate. The cumulative profit and loss stands at negative $48.04. The average return per trade is negative 0.44%, with the best at positive 7.88% and the worst at negative 7.49%. Our current streak is 2 wins as the analysis continues to refine patterns around momentum, entry, and position sizing. Now consider this scenario with crypto allocation in your TFSA. You added a 3% Bitcoin position after seeing a cross-asset signal from equity futures and gold prices. The order filled, but execution cost an extra 0.4%, due to widened bid-ask spreads in the Canadian crypto ETF during the first 45 minutes of trading. This spread expansion occurs because crypto markets run 24/7, while traditional brokers batch orders and liquidity providers pull quotes when volatility exceeds their risk limits. The 3 largest Canadian crypto ETFs carry annual management fees between 0.95% and 1.50%, plus potential tracking error during high volume periods. That net drag on a 3% allocation can exceed 5 basis points per month even before price movement. Professionals always check the ETF premium or discount to net asset value on the exchange before placing the trade. They compare against the underlying spot price on 2 separate data terminals. The biggest mistake with crypto allocation is treating it as a binary on or off decision rather than a calibrated sleeve. Size the position so that a 30% drawdown in the crypto sleeve produces no more than 1% impact on total portfolio value. Rebalance only on a quarterly calendar or when the sleeve drifts beyond a 2 percentage point band. For today's listener challenge, open your brokerage platform and pull up AMD's daily chart. Mark the 20-day moving average and yesterday's closing price. Calculate what a 7% stop loss from today's open would be in dollar terms on a 100 share position. Then assess whether that risk amount fits your current portfolio guidelines. Before we wrap tomorrow, I will examine how prediction market probabilities can inform macro risk in sector allocations. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. This podcast is curated by Patrick, but generated using AI voice synthesis of my voice. The primary reason to do this is I unfortunately don't have the time to be consistent with generating all the content and wanted to focus on creating consistent and regular episodes for all the themes that I enjoy, and I hope others do as well.